It's no secret that historically high interest rates on home loans are reducing the purchasing power of both first-time and repeat homeowners. Mortgage rates should drop from their present highs throughout the course of the upcoming year, but it's unlikely that they'll hit the record lows that were attained a few years ago. What information is important to know if you want to determine what mortgage rates will be in 2024? For buyers and those wishing to refinance, fixed mortgage rates will likely continue to hover around 20-year highs and remain stubbornly high. However, if the Federal Reserve decides to cut the federal funds rate in response to a faltering economy or lower levels of inflation, mortgage lenders might decide to offer borrowers better terms and lower rates. Many mortgage rate experts have presented a summary of what to expect as 2023 comes to an end and the home buying season of 2024 begins. Housing values have an impact on one's capacity to secure a mortgage, in addition to variations in interest rates. Economists differ on how prices will rise in the future. Some predict merchants in certain marketplaces will start lowering their pricing in response to higher fees. In 2024, home prices are expected to at least stabilize and not rise as swiftly as they did in 2023 due to a statewide housing scarcity, which kept property values and prices higher. 30-year fixed interest rate mortgage rates have been varying since October 2023, averaging 7.52% as of December 1, 2023, with rates ranging from approximately 7.5% to 8.3%. Between around 6.7% and 7.4%, the average 15-year mortgage rate fluctuated over the same time period. As of December 1, 2023, the average was 6.71%. For both terms, the rates have gone up by roughly 75 basis points in the last 12 months. Interest rates on mortgage refinancing are often higher than those on home buying loans. As of November 30, 2023, the average rate for a 15-year mortgage refinance is 6.92%, while the average rate for a 30-year fixed refinance is 7.70%. Because interest rates are likely to remain near to their 20-year highs for the foreseeable future, house builders and sellers might be more willing to offer buy-down mortgages. This loan program temporarily lowers the mortgage rate for the first 3 years of the repayment period, which could help reduce your interest costs during that first stage. Temporary rate buy-downs remain a viable alternative for borrowers struggling to purchase a home in the current high-rate environment, even if they become less typical in 2023. The interest rate on a 30-year fixed mortgage initially got close to 7% in October 2022. This happened again in May of 2023. After then, the rate fluctuated before reaching a peak of 8.3% in October 2023. The rates were at their highest point since 30-year rates last exceeded 7% in March 2002. The average 30-year mortgage rate for the week ending January 7, 2021 was 2.65%, the lowest ever recorded rate when compared to current rates. Current rates appear to be sticking closer to the historical norm than below average rates that began with the Great Recession, when the 30-year rate mainly maintained between 3% and 5% from January 2009 to May 2022. Numerous factors influence mortgage rates, such as the state of the economy, the rate of inflation, the Federal Reserve's monetary policy, conditions surrounding the housing market, bond markets, demand for home loans, overhead costs incurred by lenders, the borrower's financial attributes. There are a few strategies that could help you qualify for a mortgage with a lower interest rate, even if the majority of these economic factors are outside your control. Enhancing your credit standing. reducing the debt-to-income ratio, deciding on a less expensive home to purchase. You should put down at least 20% on a conventional loan in order to avoid private mortgage insurance, which is included in your loan's annual percentage rate. Select a mortgage backed by the Federal Housing Administration, the U.S. Department of Agriculture, USDA, or the Department of Veterans Affairs. Applying for a loan for a first-time buyer, or, if applicable, help. Expert predictions indicate that mortgage interest rates may progressively decline by the end of 2024, most likely peaking at 7% to 8%. Remember that the housing market is dynamic, just as the macroeconomic situation is. Because of this, there are still questions regarding the Federal Reserve's possible actions in the future and the rate of rate decrease in the event that the current trend of higher for longer rates reverses. Click like and subscribe.